Hello and welcome to the Law of Money. Surya Bhatia, as always, joins me. How important is asset allocation? What typically happens is whenever one asset starts moving up, we tend to all gravitate towards that asset. And we feel, oh, let me just move money away from the others.
From everything
and
else.
Put into
Just
this.
put it over there.
Because this is going up.
That's right.
And we've seen real estate not going up much at all. So a lot of money is moving away from physical assets. I think even gold as being the first choice of investment for most Indians is fast changing and money is moving to other assets. But again, like you mentioned, equity is something which has seen a good run. We are sitting on a Sensex above 30,000, even with the corrections that are happening, which is significantly higher than what it was 5-10 years ago. How important is asset allocation therefore? And how important, more important is to stick to it when a particular asset class really starts rising?
See, asset allocation is critical. I think in all the investment strategies you do, investment horizon definitely takes a big issue within the overall parameter when you decide how to invest. Asset allocations follows very closely. Allocation of your portfolio is really very, very important, how you define the strategies you want to invest in. As you rightly say, putting my money into the asset class which is performing, it's my greed which makes me go that path. Few years back, it was real estate, it was gold, and inherently these two asset classes have been embedded in the investor's mind, and mind you, it's Indian investors. Globally, these two asset classes do not form part of the portfolio. It's India which actually talks about real estate and gold, and to an extent rightly also, because real estate we have seen continuous stretches of bull run. Only in the last 7, 8, 9 years, and more especially in the last couple of years, 2 to 3 years, we can see real estate actually not doing well, and very few times when you see correction happening in real estate markets and substantial correction. So that's what people have, that fear. Now an asset class which is not going up, the fear is it is not even liquid asset class, which otherwise was highly liquid, is not a liquid asset class anymore. Gold last 5 years not doing well. So, and to add to it further, your bank deposits are also not giving you returns. So what has this led to? So even the investors who are not fit for equities, let me say this, let me just put my foot in the door when I say this to you. The investors who were not even ready for equities have actually come and entered equity markets. It's not a bad call, but all investors should understand the risk attached to the equity, that volatility attached to the equity markets. It is one of the few asset classes surely which can give you a return which is inflation adjusted, but after understanding the risk. And hence, an allocation to the portfolio holds a very, very important position. Undermine what your levels of your risks are. Based on that, as we earlier said, as well as investment horizon of yours, long term, do allocate equity as a portfolio. Short term, don't look at equities at all. Even if markets correct, you are tempted to enter, don't enter equities if your horizon is short term. That's period.